once again, this is Prince Dice here, the Royal Financial Investment Group, coming to you guys with another video about crude oil. It's a hot commodity right now. I think it's trading at, I want to say, somewhere between the 40-50 range a barrel, which is, the lowest I ever recall seeing. I think it's probably since like 2007. Usually oil trades around about $80 and $90 a barrel, and when it goes up to $100 a barrel, it's like, usually we have something going on in the Middle East, it'll jump up to $100 a barrel. So to see it traveling down this low is a pretty big deal, and something that's kind of shocking everybody. As you know, it's a spinoff to gas prices. The gas prices going down as well. That's due to crude oil falling down. There's a number of reasons why crude oil is falling down due to supply and demand. America has just become the biggest supplier of oil. We're not importing as much oil anymore. We're kind of like using our own resources due to geopolitical reasoning of what's going on in the Middle East between the two biggest oil producers in the Middle East. They're still producing, like, I want to say 4 million barrels a day or something like that, some crazy number. And, America's usually the biggest consumer of oil is now using their own oil. A lot of things, they didn't come up with the little treaty that they met up with in NATO. So it's a lot of political things that are going along with it. And plus, supply and demand, the big push now is towards clean energy, electrical cars, Tesla's putting up electrical car, all these type of things. So those are all type of factors that are going into the risk of reasons why crude oil is dropping. So for like anytime you see anything going down, as you see something tumbling, it also can mean a great opportunity, because when everybody else is selling, you can buy, usually that's a good time to buy. And, oil returns back 4 or 5 years from now, we can be seeing oil right back at $90 or $100 a barrel. But, nobody knows the future, because if we did, then all of us would be billionaires, right? So that's the thing about it. So the biggest thing, I see a lot of people say, hey, you know what, man, I'm seeing oil is moving like crazy. So I want to be able to have the opportunity to be able to invest in oil. And this is why I have this video. So the reason why, I just want to give you a little backdrop to the story of, why we're seeing this dramatic change in oil, starting with the summertime. We've seen, and it's slowly been kind of tumbling down, and some days it's trying to peak its head. But some people's like, hey, maybe this is the bottom. So, hey, I want to be able to invest into it. So first of all, let's get into this. Oil is a commodity which is traded on the futures market, and with E-Trade, you can trade on the futures market if you have a futures account. If you don't have a futures account, then you can't trade on the futures market, right? So you have to have a trade of So when you turn on the TV and you see these numbers of $51 crude oil, and those are futures accounts, what it's going by, right? And it's a lot of people that are shorting means betting against the oil, and there's some people that are buying oil and things like that. So pretty much it's the futures market. Your commodities. Your commodities are things that, such as your wheat, what is it called, the pork bellies and things like that. They're commodities. And the thing to think about it is, in the futures market, those things are not securities. So what I mean by that, just try to give you a quick explanation, is that if you go out and you buy oil, for example, you don't actually own a barrel of oil. You know what I mean? So it's just pretty much like, essentially, the way I think about it is kind of it's like being traded off of thin air. So it's just that people are just buying and selling or whatever. It's just that if a company liquidates, it doesn't say, okay, here, you can just say, hey, I brought 10 barrels of oil, I want to deliver it to my house, something like that. No, it doesn't work that way. So it's the futures market. These are not securities. These are derivatives. And I have to make another video for that to, get into the details of derivatives. So hopefully, I wasn't doing too much talk, but let's get straight down to the point. So let's say if you don't have a futures account and you say, hey, well, I still want to have the ability to be able to profit off of, oil going down or up or whatever, right? So here on E-Trade, I'm logged on, and I'm here to the research tab. You click on the research tab, and that's where I'm at now. So right here, we're just going to go to, for prime example, let's go to crude oil. Let's type in the crude oil. I typed in crude oil here on the searches, on the search box, right? Let's go to crude oil stocks, right? So it tells me futures products is the first thing that pops up because it's the futures. It's something that's traded on the futures market. So I clicked on that tab, right? And you see these categories. And this right here has all the categories on the futures market, but we want to go down. Oil is probably going to fall up on the energy, right? Oh, bang, which it does. Right here. WTI crude oil, right? So let's go to view. And we can see here. It's going to take us to this page. As soon as my computer decides to load on up. So boom, WTI futures crude oil. This is the prices that you see all the time on crude oil, but this is all things of contract size, 1,000 barrels, things like these. These are contracts. These are futures, right? Trading hours in London, New York, Chicago, things like that. This is if you have a futures account, you want to trade on futures. But hey, you say, hey, I don't have a futures account, but I still want to get into this. So let's back out of that, right? So let's go back here to. I'm going to symbols and type in crude oil. Let's go. So here you have a few things that come up. You see it says crude ETN link, S&P blah blah, crude double blah. Kind of like so many of them. I don't know which one to pick. So let's go to the UWTI one, right? Let's see what this is. I'm a little cloudy, a little stuffy, so excuse me about that. So let's go here. And this one is telling you this is a velocity shares 3 times long crude oil. So it's an ETN. So you're like, I don't know what an ETN is, right? And essentially, this is giving you data core to represent past performance. Past performance does not indicate future performance. It's always, it's pretty much telling you that, hey, you can lose your money because on the ETN, you don't actually own anything. It's not a stock. It's nothing that's redeemable. It's just going off of the good faith of the people that issued it. And if that company goes to crap, then you can go to crap as well. That's pretty much what it's kind of telling you. So what is this doing? Is indexing, right? A big thing we also see this word of indexing excess returns. Let's go here to charts. Indexing, just to jump on the indexing. So you see the word indexing, it's kind of like, you see the Dow Jones has raised 300 points. The S&P 500 has, dropped this many points. So the NASDAQ is going up 2 points, the highest we've ever seen it. Those are all indexes. And what indexes are is inside of those indexes, for example, the Dow Jones has 30 companies inside of it, 30 domestic companies, right? So, and it gauges those 3 companies. And as those companies move, that's the way it moves, right? And that is a way that the outside people pretty much gauge the market off the Dow Jones, off the S&P 500, off the NASDAQ. The NASDAQ is usually your technology stocks and things like that, right? So those are ways you look at it, right? So essentially, that should be, that's pretty much it, right? Indexing. It's a passive way of investing. Now, hey, I don't know anything about the market. I don't want to buy individual stocks. I just want to buy the index, and I just want to move with the S&P 500. S&P 500 is the Standard and Poor 500, which is 500 companies that it has picked, large cap companies that it has picked, and as those companies move, they are price weighted, and as they move along with it. So it's a passive way of investing when you see something saying index. And it's a ton of indexes out there. So what this index does is tries to mirror the movement of oil. So let's go back. We're going to go back to the 6-month period, right? And we can see around here, around about June to July. Let's go back 9 months so we can get a better picture. So around about here, June or July, in the summertime, we've seen this steady decline of oil, right? So this here is a good reflection of what's going on currently with crude oil. It has seen a slow and steady decline because at the peak here in July, it was trading for about $40. So, but since then, it has seen a steady decline to now it's trading for a whopping $5. This could be something that you can say, hey, this is mirroring, this is what it's trying to do, is mirroring what the crude oil is doing, right? It's an ETN. So it's mirroring what the crude oil is doing, almost something like indexing it. It's mirroring what the crude oil is doing. So if you was to buy this, and let's say crude oil went back to its good old days of, and let's go back 3 years, right? So we can see back in its good old days of back in 2012, it was trading actually for $65, almost $70. and here it is. This year's trading for $5. So you can say, hey, I think oil is going back up. I see a great opportunity. I don't care what anybody says. It's a great opportunity to buy. So boom, you buy it, and you buy it, and crude oil goes back up to $90 a barrel, $100 a barrel. This will go up itself as well. So let's go back a little bit further, 5 years. So this index started. The reason why you don't have any more data is because this is when it probably started, February 6th of 2012. But as you can see, look at that. That's the lowest it has been. It has ever been down here where we see it at presently. So a lot of people see this and say, well, I think it's going to be a good opportunity for me to buy. And they may buy it when it's only trading for $5. And this mimics the, the crude oil. But that's not the only one that's there. You have some here that's, it reverses itself. I don't want to be too long. I'm not going to get too deep into it, but just to open up your mind so you can do your own research and kind of think about it. So when you look at this one, for example, right? This symbol is, where's my symbol? DWTI. And we're going to look at the chart on this one. You may look at this one and say, whoa, 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 what's going on here? This one started in 2012, and now it has gone up. And it's continued to go up. Let's take a little closer look here. Let's go 9 months ago. He's like, wow. Well, how's the price of crude oil dropping and this one is going up? This one is having a reverse effect of oil, right? This one is pretty much like the one that's saying like, hey, we're going the opposite way of where crude oil goes. So this is another way you can get in and invest with oil and say, hey, I think it's going to continue to go down. And this is where you can invest with it, or you can short, things like that. I don't want to get too deep into it. But this is another index that is on the reverse way of which way oil is going, right? And just look at one more. We're going to go into crude. We already looked at DWI. We looked at oil let's go with crude. The ETL volatility index, right? It's all type of indexes that are out here. It's, as the volatility increases in oil, this is where this one essentially makes money, right? Because it tells you right here, CBOE, crude oil volatility index. So this one goes by the volatility that's inside of, let's go back so you get a closer window. The volatility that's going on inside of crude oil, right? Round about here in October, you've seen a lot of volatility of going up and down and going with oil. So this tells me that the volatility in the oil has steadily increased. So one more thing before I jump into that, we're going to go back to the other one that we saw. And just for your research, and you can say, hey, I want to invest in oil and I don't know which one I want to get. You can go here. You have a ETN report, right? Let's go back to you. As that pulls up, you have things like your ETN report. You have your perspectives. You have a few things you can come down here for prime example. You can come down here and look at the ratings of it. You can look at the strategy. The investment seeks to replicate the net of expenses 3 times of the opposite inverse. This is the one we saw that was inverse, right? This is the one that's actually going up. So you can come down here to your strategy and it'll tell you these are ways that, hey, I don't have a commodities account, but hey, I want to get into it. I have a little money. I want to get into this oil business because I think this is what's going to happen or whatever. You can do that. And this is the ETN report that we was pulling up earlier. And you can go down here, get more information about it as well. You can see what the beta is. If you don't know what the beta and the alpha, they have your glossary, things like that. S&P crude oil index. Get all type of good information. So I'm not recommending a particular one, but these are all type of information ways you can get into playing with oil without having a futures account. So I hope this video was useful. Hopefully it was helpful. As always, hit that like button, hit that subscribe button, hit that share button, share it to everybody, tell everybody else. Only if you saw the value. But I hope that helped you guys out. Hope you at the end of this video, you have more information than you did before you left. As always, I know my true fans make it this far. If you're one of my true fans, let me know. Drop me a comment, and I would definitely reply back to your comment. All right, thank you guys. This is Prince Dyson, Royal Financial Group. Be safe.